Right, we should be live. Let me just open up chat. A little bit of a different setup today. My floors are being done, and I had to vacate my house for a few days. So hopefully this is going to be smooth. I'm actually in a phone booth in what do you call it? The shared office working space. So hopefully, fingers crossed that their Wi-Fi is pretty good. So, welcome to another Topstep London session. Very pleased to be here. Let's see if we can find some opportunities. I see that the copper is moving, so that might be something interesting. So let's do a little bit of analysis on copper. I'm just going to log into my Topstep X. And for now, we're just going to be using a combine. Like I said, we're doing this for London. Going to change to the London session and get copper up there. Where are we on the P&L? I don't like to look at my P&Ls when I'm actively trading, but we're just going to check that. So, you know, about a third of the way there, just over that. Okay, and I'm just going to block that out so that we can focus entirely on the process. Right. And that should be pretty good to go. What is going on in copper? So copper, let's start on the weekly chart. Just a quick check. Can everybody hear me? Can everybody see me properly? Audio decent. Okay, that's good. Audio is from my laptop. I didn't bring any elaborate microphones. Okay, so on the very large time frame, there was I'm not sure what the cause of this gap was, whether that was just a contract change that went a little bit crazy or whether it's just missing data. So I'm gonna not pay too much attention to that. But daily chart, a little bit of a basing going on here. 4-hour chart, there is a supply in the way, but technically we're opening below Friday's London session value. Something that I like to do if I don't have enough space up to the value area is to actually use the value area edge, the outer edge, for a level of interest, maybe to short it. So we're going to have a look at how that works. So there's no rushing. One thing that I can see on the profile that's developing right now is some single prints. It's a pretty strong auction. I also like to use overnight VWAP to see exactly how far or how close we are to it. And we've just gone through it actually and increased some volume. So that is a bit of a gap fill, but yeah, I want to wait for a really good trade location here, and that means this is now sort of middle of a middle, so either value low or initial balance high will now become my areas of interest, and this value low is also right around the Asia high and the average London session range high, which falls right into that zone. So really this entire area, what is that price? It's 424.96. God, my eyes are terrible. I'm gonna need those very focused soon, Granny D. Yeah, so that would be my area for shorts. If that starts to get really run through, I'm gonna change my mind. Now, if I get a bit of a pullback, then I want to see a pullback down to what was the initial balance high, so that breakout area, and that is located at 422.31. So those are some of my prices of interest for copper this morning. Copper tends to move pretty well. I think on Thursday it was a little bit quiet. Was it Thursday? No, Friday. I looked at it on Friday and I was like, it was very quiet. So maybe Fridays tend to be quieter. It's something to keep an eye out. Alright, let's see who we've got in the house. So look at the chat. JD says, any idea why GC is so divergent from the rest of the metals? I would guess because it's probably the thicker metal that is traded quite a lot, so it's probably a bit harder to move it with less size. So it tends to sometimes lag, because you know London technically is an overnight session for GC, so I wouldn't expect that much movement. The only time London is traded for the London session during something called the curb trading on the London Metal Exchange is very late in the day. So curb trading is a 10-minute period when all metals are traded excuse me, on the London Metal Exchange. I'm just going to clear my throat for a second. Right, that should be a little bit better. I've got frogs in my throat today. Ribbit. Undauntable says, can we turn up your mic up a bit? My microphone is actually pretty, yeah, I'm going to try, but if it starts to, I'm going to bump it up a little bit, but on my end I can see the levels are already hitting about minus 16 decibels, which is actually pretty loud. So, but I'll still bump it up a little bit, so let's try 3 decibels. Is this a little bit better? Is there a micro contract for copper? No, unfortunately. No micro contract for copper. So if you're trading smaller accounts like 50Ks, you might have to maybe wait for micro gold to start making a move. Because at $12.50, that's pretty expensive for a 50K account. You won't last. You won't last very long. Right, do you trade natural gas? Constantinos wants to know. I don't trade natural gas. I think I traded it when I first started with energies, and I didn't like those big old gaps that it was doing. There is a very good reason why natural gas is considered the widow maker. What a lovely name, eh? So it does these like ridiculous big gaps at the opens, and then when it moves, it really moves. But for the most part, it's a little bit strange for me, because when you look at it, some days are very liquid, other days not so much, and I don't like the inconsistency of that. I like for my products that I choose to trade, especially for London, to move in a pretty consistent way. So, if we're expecting, like, let's say 130 ticks for copper, I would expect to see around about that number to a margin of error of about like 5% or something. And then if we have a trending day, that will show up as vastly overshooting the average session range. And then we have additional data that we can base our decisions on. But natural gas has to be one day moves a ton, the other day, next day is like super quiet. So because of that, I don't really enjoy trading natural gas. Still too low. Guys, you need to get some better speakers, because honestly, like, I'm looking at my levels here. Okay, I'm going to show you this. It's going to look a bit weird, but I'm already like smashing into minus 15, minus 10. Like that's a pretty high level. And I used to do sound engineering, so I know a little bit about this. Now, if I can push it higher, but it might start to boom. So consider investing in maybe a better pair of speakers. Some of the people these days, they tend to push microphones really hot. And here I don't have any kind of a limiter or anything, so YouTube is doing most of the normalizing. What is the typical seasonality pattern for metals? That's a good question. There's not that much of a seasonality pattern aside from summertime. Typically August tends to be pretty dead for most things, and metals are not exempt from that either. But it's less dead than some of the other products. Like if you go and look at Forex, for the most part, if you have nothing else going on in the world, it's going to be you know, like literally like watching paint dry, let's put it that way. So you sit to trade and you're like, are we on? Is the internet working? Like, what is this? So that's how dead some of the products get. So I would expect to see that kind of a slowdown even in like already like second week of August. However, we have had some stuff going on. Obviously Biden just quit, rage quit. So that might put a bit of pep in the step in equities and in gold. And today gold, let's have a look at it. I mean, it's pretty quiet. It hasn't even broken out of its initial balance range. It's still just crawling, doing absolutely nothing. It is looking a little bit bullish to me because it's basing, it's trying to go higher, but it's just not finding buyers. One thing that I look for as a profile trader from that side of things is that if we're going to have like any significant move, that I don't have this this structure building. So we are now going into effectively like 90 minutes, past 90 minutes of London, right? Almost 2 hours. And the price is building structure. What does that mean? Well, I have 4 TPOs, which are effectively like 30-minute candles. That's what they are. So each letter represents one 30-minute time period. And then it's like a histogram just organized in a slightly different way. That's all it is. It looks terribly complicated, but it really isn't. So it's showing you the same thing that we see on the regular candlestick chart, which is some sort of a base. But at the same time, it can also show you in a quite transparent way whether you have a good auction going on or not. And right now the auction outside is doing terribly. Like, it's just not happening. And it's not to say that it won't pick up speed at some point, but gold can sometimes be super quiet on Mondays and then sort of starts picking up speed into the overlap. So not just, London is like snooze, we're still hungover from the weekend, can't be bothered. Oh look, Americans have woken up, let's trade, rah! So yeah, maybe that'll happen today, so keep an eye out. Okay, let's have a look at some more questions. Vladimir wants to know, Dee, can you explain a little bit about your style of trading? Thank you. Yeah, so my style of trading involves what I like to call 4 different pillars of trading. What does that mean? It means that I have 4 different concepts that I like to look at. They usually don't have that much to do with one another. When people talk about trading, they usually go, I'm going to use a couple of lagging indicators. Maybe I'll add another stochastics indicator, which, by the way, is still lagging. I'm not a huge fan of lagging indicators for that purpose. Whoops, my light seems to have gone out. What is going on with my light? Hold on, guys. Let me just plug that in. There we go. Not that this light here is terrible. I just feel like the overhead, it's a bit weird. So this is looking better. Okay. So the first thing that I look at when I look at the chart, let's have a look at my normal charting. And let's have a look at gold, because we haven't done that one yet. I'm going to expand it. I go on a very large time frame, and then I look at where the previous buyers and sellers have come from. And not just any old buyer and seller, it has to be something that is really visible on the chart. That's the first step to finding good trade locations. And the second step would be looking at how far that initial move went in the subsequent time periods. So if we didn't make much headway, that's going to make me a little bit suspicious to take yet another short from an area. Like right now we have this very spiky looking reverse hammer type candle, which might be creating a new supply after we smash through all-time highs. But at the same time, those sort of spiky moves tend to bring yet another movement through them, because they are typically pivotal moves into either a liquidity gap or another level higher up, but we don't have anything higher up. So my first step is that concept of supply and demand, right? Where were the buyers and sellers previously, which is also called the previous inventory, by the way? How far do we move from a level, and how many times do we test a level? Typically, if a level is pretty fresh, we can expect some sort of a reaction from there. So I start on a weekly chart and I look downwards. So now we're going to go down to the daily chart and kind of do the same thing again. So where were the sellers? All the way up here, right? So that becomes my loose area of interest. So from a daily chart, it's not like, oh, I'm going to sit here on my butt and do nothing until the price gets here. That's not the point. The point is to get contextually where do we come from and where might we be going, right? And then I look at where the other demand is. So where were the buyers? Well, this was the first one, around 23.73 roughly. There was some big buying happening here. And before then, we had a bit of a basing, so we had some consolidation where price was deciding where we're going to go. So that becomes a little swing. So an established swing where we now have two areas for reference. Sellers were here, buyers were here. Once I've done that, I will typically do the same on a 4-hour chart, but then let's jump to the second part of the way I trade, which is the profile. Profile looks at the 30-minute charts in its core and in its initial sort of ideology. You look at the previous day's developments. So where did we have most of the business taking place? That tends to be called the value area, and it's typically the distribution curve that comprises 70% of where yesterday's price activity was going on. I'm trying to kind of simplify it without using too many profile terminologies, because they can be a little bit confusing for people who have not met with them before. Now, profile is like a little methodology in its own right, with many moving parts where you can sift out how strong the move is. We also have some market generated information that happens intraday. So for example, we have the first hour of trading, which is called the initial balance. That becomes a reference point for the auction process. And you know, so many other little different things that you can use it. It's a very powerful tool if you use it the right way. Now, some people think that every time we are below yesterday's movement, that means we absolutely have to fade that movement to the upside. That's not always the case. Okay, there are subtleties in reading profile, and one of those would be, are we opening too far out in relation to the value area? So we're opening below it and way below it. That might be opening up a possibility for a gap fill to go back to that level. But if we're opening somewhere in the vicinity of the value area, but just below it, that's actually quite bearish. So, you know, subtleties, we probably don't have time to go through all of that here. But yeah, it's a very nice lens into the market. So it's not really an indicator. It's not like, oh, buy now, sell later, and you know, this is where you should be here. Definitely, it's not that kind of a tool. It's a sort of market mechanics tool that can give you a way to make better decisions overall. Now, the third part of my methodology is the average ranges. So I have probably about 3 or 4 uses for them, depending on what sort of a day we're looking at. Some people have just the average daily range, but I have my own twist on that, because as an intraday trader, when I started doing this, I felt that on days when the market overshot a DR, I was just left wondering, well, now where are we going to stop? And then, some people suggested, R1, S1. That's all good. But then I thought to myself, hold on a minute. Well, we have the regular trading hours. So why wouldn't I get why don't I calculate a similar measure to ADR, average daily range, and calculate it using just the regular trading hours? So I did that, and it really worked. So now these little yellow lines that you see, the yellow dots that you see, those are the average session ranges. And then I also have the average daily ranges, which might be a little bit difficult to see on this screen for you guys on YouTube. So it's further out. So we are now in the London session. And London session for gold typically has a smaller range than the overall ADR. So on days when either the market is quiet and we're super far away from ADR, you can use these twists, my twist on the daily range, which is called the average session range, ASR. You also see that in Coach Ray's approach, because Coach Ray was with me from 2019. He is one of my market stalkers, but he's got his own twist on my market stalkers methodology. So he's basically found his own way to use it. It's very malleable because neither of these tools are, oh, this is exactly how Dee uses this, therefore you have to use it that way too. There are many ways to form a system around the existing ideas. And then the fourth big thing for me would be the time of day. So I have certain expectations and certain events that I have witnessed over and over the last 16 years, 11 which out of those were as a prop trader, intraday, staring at this day in, day out. And there are just certain times of day when expected movement happens. Sometimes it's a reversal, sometimes it's a continuation, so it's not as simple as, oh yeah, let's get to 10 a.m. my time and look for reversals. It's not quite as simple. It is very contextual, but time of day carries a big weight in whether I'm going to get involved in a setup or not. So for example, if I were to, let's say, see a failed auction that happens very late in crude oil session. So we're sitting there all day. It's like 30 minutes to settlement for NYMEX. So most of the day is already done. And then I see a failed auction developing. I'm not going to take that. Why? Because I know for that time of day that the failed auction that goes all the way is actually a pretty rare event. So time of day will make me decide whether or not I should be getting involved in the setup. So really those are the four pillars of what I do. So we have supply and demand on larger time frames, market profile on sort of intermediate time frames and intraday levels. Then we have the average ranges in multitude of ways, and finally time of day. So in very kind of condensed version, that is what I do, and that is why I'm able to get some pretty decent trades out of what I'm doing that are fairly accurate and that they don't suffer a lot of drawdown, which is kind of important. I can't read this next thing. Rel and Andrai, I don't know. I tried. I'm so sorry. But yes, you've got a question. Do you trade reversals? If yes, what are indication of reversals patterns you're usually looking for before taking the trade? That's a loaded question. So as an intraday trader, you have to have the ability to look at both continuations, reversals, and mean reversions. So reversal versus mean reversion is not necessarily the same thing. So you can have a pullback as well. It's like, what is that? Is that a mean reversion or a reversal? Depends how far it goes, right? So yes, I do use reversals like most intraday traders, but how you determine them, that is the loaded part of the question. So you usually have to have a good high probability level where you're even going to start looking for a reversal. I know that many people find some success just with oh, 9 EMAs and all of that. And that's great, but to me, I'm a bit of a perfectionist and a bit of a nutter, to be honest, and it just wasn't enough. I felt like I wanted to have the full contextual idea of what is going on in the markets before I made my decisions. And that meant I needed to explain to myself a really good reason why I would be getting involved. Now, the way my brain works, it sort of works in flow diagrams. Okay, so when I'm looking at a chart, I will be thinking in the following sequence. We have value low. Are we at value low? No, no action. Okay, so imagine that in a flow diagram. So level, no, do nothing. Okay, once we get to the level, I will then have the next set of sort of execution flow that I need to see happening. So we get out. Do we have the level? Value low? Yes. Is there another confluence? Let's say average session high. Yes. Okay. Is there a reversal pattern? No. What is the lower time frame doing? What do we have on level 2 data? Are we seeing sellers stepping in? No. No action. But if at any point of that sequence I see the price activity justifying the reversal at the level, that will give me the signal to execute a trade. So I'll be like, okay, value low, reversal pattern, seller stepping in, get involved. Okay, so hopefully you should start doing that for yourself as well, because most people, the way they trade, they sit there and they just go, level, is there, oh, it's crossing over VWAP, long, and that might work, right, for a while. You might get lucky, especially on something that goes like thousands of ticks like NQ. But for the most part, once the craziness of the volatility of the markets that we've seen over the last sort of 2-3 years, once that starts to die out, that's when the full scope of the trader's skills and your choice of trade location comes out to show its ugly face. Because most people, they don't have that great choice of trade location. They expect the momentum to take away the price from the entry, and then sort of hope that that momentum will be enough. But I've lived through years of markets not doing anything, right? We've had extremely, like I went through Forex die out, and then I went through ES getting super slow during 2014, 2015. To the point that we had days where we only had like 12 handles, 12 points for the entire session. It was so painful. So then you have to start thinking, well, I got involved here and I'm looking for a breakout. The break never came, and now I'm looking at my trade location being in the absolute middle of the range, middle of the day, nothing is moving. However way I go in, I go long, I'm in a drawdown. I go short, I'm in a drawdown. So this is where you start to think, I need to change something here. And I've always been somebody who has a pretty good observational skill. So I would sit down, I would watch, I would write things down, and eventually I would start noticing some patterns. Away from just trading, clicking buttons, sometimes it's actually okay to just step back and observe, right? The frogs in my throat have reappeared, so I'm just going to clear my throat again. So, to answer your question, as an intraday trader, yes, you need to use all of the types of setups. Momentums, pullbacks, mean reversions, and yes, reversals. And you have to have some good levels. How you spot them, that'll be the skill that you have to develop through experiential data. I said it before that I'm a big proponent of Kolb's experiential learning cycle. So rather than you smashing in like 40 trades in one session, try to do 3. And then at the end of the day, review how you've done. Okay? I call it the trader post-mortem. Why? Because it's an extremely revealing process. It first forces you to have good trade locations, and second of all, it really forces you to look at the quality of the setups that you're taking, really. So rather than going, it's moving, click, oh, VWAP, click, oh, 9MA, click. So basically taking any and every move, you sit back and go, where do I want to be a buyer? Where do I want to be a seller today? And then you wait for those levels to come. After the day is done, you do a review, and you go, okay, that didn't work. This didn't work. Why didn't it work? So you have to be very analytical. If you entered a reversal without any price activity showing you that there is a reversal, that's generally a bad move, because you're trading through like wishful thinking. You know, we don't have crystal balls. We're traders, right? We're not psychic. So we have to have something on either level 2 data or something like time and sales or just a plain price chart showing us that there is a reversal. So good level, price activity, and then you can review and see how well you do around those levels. Undauntable. D, if you were to look for value areas of the profile this time, would you only use the London session 9 till 4:30, or how would you use it? I would cut it off at COMEX. This is what you see on my charts. So I'm going to clean that up a little bit. Let me just switch off standard deviations because they do paint over the candles a little bit. So if you look at the value area, let me mark it out, that I have here. Just going to remove the other rectangle. So this is copper value area from Friday. This is what I like to call the shortened London. The reason why I don't like to use the entirety of the London session all the way through to Euro close at 4:30 p.m. my time is because you have something called the overlap, and then COMEX kicks in. So what does that do for the data set? It means that the players that were very happy during London suddenly have a whole bunch of volume coming in from the overseas activity and effectively messing up the time series data that we have. So more volumes, different players, different ideas. So I don't like to mix and match. We've done a lot of tests on this. I've even written algorithms where we're using the value area outer edges like I want to do today for copper. Where we're effectively using either the entirety of London or separately just London, the shortened version, or just COMEX. Guess what? The separated versions of the value areas performed a lot better as reversal areas. Now, if you're a swing trader or something, you might have value in looking at extended sessions, because then even if there's a slightly deeper movement, you still don't have the time constraint that we have as intraday traders. So we only have a limited amount of time for our trades to work out. So and usually in the beginning of the day, there's like one movement, and then halfway through the day, at some point, there will be some sort of a reversal on a vast majority of days. So it's almost never that you're going to get the same movement through London and New York. It's not going to be like Tokyo goes up, London goes up, New York goes up. Everybody's going up. That's a trending day. That doesn't happen that often. So to sort of solve that problem, we decided to start using very separate, very specific separate value areas for London, separate one for COMEX, and separate one for Tokyo. And those three worked out the best. So hopefully that helps you. Amoras is saying, I'm trying to get my head around the term failed auction. Can you please explain a little bit more around what that is? Are you referring to a failed level? No, I'm referring to the first hour of trading, so first and foremost. Let me find an example for you because it's always easier. Do we have anything? No, that's a DAX is also doing a sustained auction today. Let me have a look at something else like crude oil. Actually, I might be able to find one by going back in time. Here we go. Okay, here's a failed auction for London last Tuesday on copper. So I'm going to bring that into the middle. Okay, so when I go back in time using my lovely Blatek backtest time machine, you see this red box. This is a 30-minute chart. So this red box represents the first hour of trading that we call the initial balance range. One of the reasons why I decided to do these London sessions later, so at 9:30 my time, which is a whole 90 minutes after the open, is because for my setups, I usually look for the initial balance for that first hour to be extended. Okay, so before I do anything, I want to see the extension of the initial balance. So at least an attempted move to take it anywhere else. Why? Because the initial balance, the first hour trading, that's the market maker's playground. And on the vast majority of the days, it's very difficult to immediately find direction. And also for a lot of the days, you will have one of those moments where 30 minutes for the first A period, so it's called A period, is going up, B period goes down. So first 30 minutes you go one direction, next 30 minutes it goes in the opposite direction. And that kind of is across the board for a lot of the days. And sure, you might have some days where it kind of starts to move. But then look what happens. This blue area indicates that the initial balance has been smashed. So we've extended it, we've popped it. And this is now the next 30 minutes where we come back, we try to go lower. Ultimately, the market fails to pick up momentum, so it goes nowhere. So what does that mean? It means we haven't moved outside of the first hour trading range at all. In fact, we tried, didn't find any business down there, and then we came back into the first hour trading range, aka the initial balance. That constitutes the failed move, the failed auction. So it's not a failed level where the market like runs through it, so level has failed. No, it's quite the opposite. So you have a range, gets tested outside of it, come back inside of it, and then you have the failed auction. And look what happens. The very next one, next candle, 30 minutes, pushes all the way through to where we started, all the way to the other side of the initial balance, and even pops it a little bit. So that's your high probability trade. That is a failed auction trade that me and Hogue yap on about. Like, we blab about it so much that I think everybody's sick of us by now. Now, you also have something similar happening on Monday, previous Monday. So if I go further back in time, here's another London session. So the day before, initial balance gets set. Next 30 minutes goes outside of it. The following 30 minutes fails to advance, comes back, closes the 30-minute chart inside it. And it creates this pattern called the bearish engulfing pattern. Now, it took a while for this to get going, but we also had the overnight VWAP as sort of a stopping point there. So that was a confluence that might have been a problem for the further upside moves. So you can always use those. VWAP is a pretty good confluence level for anything that you're doing. And the same thing happens. So we fall back into the value, mess around a little bit, into the initial balance, and then rotate through it. Almost. Like it took a while to get going, but eventually it rotated all the way through. So you can have the partial failed auctions as well, but that's the gist of it. So you have the first hour of trading. Market tries to go outside of it. It fails to move any further, comes back into the initial balance and rotates back through it. So that's the failed auction. Hopefully that's a little bit clearer. Coop says, Dee, I have $200 left in a drawdown on my XFA. I'm so bad when it's real money. I do great in combines, about to pass another one. Any tips on the mental aspect? Or trading an XFA/live account? Oh, absolutely, man. Okay, so Honk has that great great analogy about the beams. So when you are doing a combine, you have plenty of recess. There's no risk involved. Even if you fall off, like you're not falling from any great length or height, even. And then you get into the XFA, and suddenly the height of the beam is massively increased. So now, if you slip up, it's a long way down, right? So suddenly, all sorts of different processes kick off in our brain. Now, it's nothing to do with the markets. It's nothing to do with anything else apart from your own dopamine levels. So how good are you in controlling your emotions? How do you approach an XFA at all? Well, I'm somebody who always preaches that when you get a new XFA or any new funded account, especially if it's something that keeps happening to you, so you get into an XFA, you mess it up, and you blow out, you have to size down. There's something very interesting that happens with the dopamine levels in our brains. Every time we pass a combine, suddenly you get this squirt of dopamine and pleasure centers and everything. It's all swimming in your brain. So what that does, it increases productivity and motivation. What does that mean for traders? It means over trading, wanting to trade, having a big urge to kind of just get involved, get in there, trade it. Yeah, I'm funded, right? Well, the problem there is that this productivity leads to overtrading, and then you mess it up, and then you try and size up, and it all just goes very quickly pear-shaped. So to fight that sort of dopamine increase and getting your dopamine baseline out of whack literally takes a month to stabilize. There are faster ways to stabilize it, like you can do a 48-hour fast that in some mice models completely gets the dopamine back to baseline. But it's in mice, so take that with a grain of salt. We don't know whether the same thing happens in humans because not enough research has been done. I think there was like one study that wasn't very good quality. But the mice study showed that if they if they have the dopamine kicking off and their dopamine levels are all out of whack, they starve them for 2 days and the dopamine levels return to the norm. But if you don't want to do that, then you have to go the slower way, where you just get into the XFA, drop down to 1 micro. Okay? 1 micro, that's all. And put a trade on. See how it goes. I guarantee you that first week is probably not going to be great, right? You're going to get yourself into some sort of a hole. But by trading 1 micro, that hole is not going to be anything that you cannot get out of and something that will jeopardize the XFA. Okay? So that will be my first step to combating the issue of blowing up XFAs. And it could be a case of the market going quiet. Maybe we've had excellent trading conditions, and then suddenly we're heading into that dreaded August, and things die out. So it doesn't have to be you, it could be the market as well. But the same thing applies. Size down, keep going. Do the review every single day, and find what was the one thing that harmed you the most, because there's always one. There's always something. M. Brown says, hello Deeyana, do you take trades in fast markets? Which instruments? Well, if you watch me on fast markets, we have done ES trades in the house account. I have done crude oil trades, I have done gold trades, I have done platinum trades, I have done, nearly all of the instruments that I trade, I have done them in fast markets. Which one of those I'm going to take will heavily depend on what the day looks like, right? So if I have something that that is not looking that great, we're in the middle of everything, it's a very quiet day, we're still range bound, still stuck in the initial balance, I would probably just find something else to trade. But if you're a newer trader I wouldn't suggest hopping too much from one instrument to the next to the next. Why? Because all of these instruments that we trade, they each have their own quirks, their own sort of behavioral things that they like to do. So if you're not familiar with them, that can be a big issue, because suddenly you want to apply what you know happens on NQ, but then you come to do CL, and CL right now is pretty slow. So you're like, well, that didn't happen like I imagined. So yeah, you have to live and breathe with the instrument, with the product. I know you see all of us guys who are a little bit more experienced, you know, you have Dakota, you have Ribs, and you see all of us sort of hopping between instruments. You have Coach Jay, he trades a whole bunch of things. But for the most part, we all have something that works well for us. Like, for example, Rips is very specialized in NQ, but he will dip his toe in every so often in crude oil and gold as well. Not very often, because he likes the momentum in NQ, because he's a momentum trader. But then you see Dakota. Dakota trades a whole host of things. He's a you know, what was his initial instrument? It was the Nikkei. That was his primary instrument, and then he moved on to NQ. He trades gold, he trades crude oil, he trades a whole bunch of things. Coach J also trades multiple products. So you see those of us who have been doing this for a while, and you think, oh, I can just start hopping. But just remember, guys, that all of us, as much as it might look like it's some sort of a discretionary approach, all of us know our systems to the core. So we know what we're looking for, we know what a good setup looks like, and we've done this upwards of like 10 years. I've done this for 16 years. 11 years out of that I've been a prop trader intraday. Before then I was doing swing trading. Somebody asked earlier whether I do swing trading. I do not anymore. I don't like sitting through a move that is pulling back quite obviously when I know that I can take advantage of that intraday. So that's just my view. I do have a stock portfolio, so that's kind of chugging along slowly. And that's been there for like years, so I don't really actively trade that. Alright, so let's have a look at what's going on. There might be a little bit of slowdown now. We are coming into the end of this session in about 15 minutes or so. And I can see that copper is struggling, so let's have a look at that, because we might get a trade there. I'm not rushing today with Monday. Because it's Monday. Alright, so decision point here, overnight VWAP is being tested from the upside. We never reached my area of interest, but now there might be a chance for a little jump higher. This would be considered a scalp, by the way, because we don't have that much space. I think maybe I might have about 30 ticks there. So let's see what's going on Bookmap. You know, Bookmap for these sort of products is a little bit sketchy. So let's have a look. VWAP so far not bringing much reaction. We have some orders sitting right here at 423.15 and 423 evens. So my plan now is to take that pullback with some market generated information. As we near that level, I want to see this area remain. If it starts to disappear and we start to get really big bubbles coming into it, no trade. But if they stay, if this little order block proves to be supportive, because we have 32 contracts there, which is, you know, decent for copper, that would be my level of entry, 423 evens, so for a long. And then I'm going to look for a long to go all the way to my value low at 425. So that would be a pretty decent area. But I'm not doing a limit order. I actually trade via market orders like 90% of the time. Because I don't like it when the market misses my limit order and then I'm sitting there. Because that, to me, that's like worse than actually losing a trade. Like being right and missing out by one tick. It's horrible. So I use market orders. So 423, my level of interest. That's where the intraday order block on Bookmap is showing up. Because we have nothing else, right? We have nothing else to lean on the regular price chart apart from this VWAP, but VWAP is not doing anything. Mike Sweeney says, does a sustained auction have to happen at the 30-minute bar, or can it happen later in the day? Yeah, I mean, it can happen any time of the day. Sometimes when you have like FOMC and you look at equities, nothing happens up until FOMC, and then FOMC comes and that's when you get the movement. So the sustained auction can literally happen any time of day, and it absolutely does not have to be within the third 30-minute bar. Absolutely not. But obviously, if it does happen, it has a slightly better chance in getting to the next level. So for my methodology, it's either the previous day's value area or some kind of an average range. Because obviously there's a lot more momentum there, but it's happened. You know, it's happened a lot of times where it's a little bit quiet, and then they kind of wake up. Whether they have like a quad espresso or something, and then they go, oh yeah, they're trading. I don't know, but it's pretty common to see something like crude oil being quiet, and then just into Euro close, they finally make a move. And that becomes the main move for the day. Sometimes it carries on through New York lunchtime as well. And that can be a decent setup. But also you can have a failed auction around that time too, which would mean that you get a breakout and then that condition of going back into the initial balance to close back inside it, therefore failing the auction. So yeah. But yeah, sustained auctions can literally happen any time of the day. Right, so just looking over some different markets. Oh, this is a good question. Where would you place the ADR compared to the open? So here's the difference. ADR is always starting at 6 p.m. EST, which is 5 p.m. Central. Why? Because it's the 24-hour measure. It is not the open. That is not where you anchor it, because that's not the measure. And then also, someone else says, I think you have to place the ADR at the open. So no, you place it at the previous day's start. And it would be at the center, so the half range is above and half below. No, that is not ADR. I have no idea what that is. It's probably more a pivot point or something. But ADR is a dynamic measure. It's a dynamic measure. It is not a static measure. So when you have the open, that's when let's say the previous day's open, so 6 p.m. That's when the market starts to calculate it. How it's calculated is as follows: new high minus that open, that will mean your ADR low moves up with a new high of day. So every time you have a new high of day, it recalculates, okay? Same thing if you start going into a new low of day, it recalculates, and it continues to recalculate until one side or the other side exhausts the number that you're aiming for. So let's say you have 200 ticks of the average daily range. It will keep recalculating until one side from the open plus minus ADR low or ADR high, plus minus new low or new high of the day reaches that side. So it is not a static measure. This is the wrong way to calculate ADR, and for that matter ASR as well. So very common error. I see a lot of ADR indicators that calculate this wrong. So I don't know what the hell they're calculating. I call that the fixed DR, when you take the open from the previous day and then you plop half up, half down. That's something that you would use in a range-bound market when we're not going anywhere. And we don't expect the market to move past that level much. So yeah. Tom Phillips, still Globex open is the previous day, right? From what I know. Or is Globex open? Hold on, no, Globex opens at 1:30 my time. So you really need the futures open the previous day. you know, after the maintenance period, that's what I'm talking about. So that's where you anchor the ADR. That if you want to do a calculation, you want to create your own indicator, that's how you'll be doing things. Davey Edge says, Dee, while on sim, I think limit orders are fine. It's only when on live that it skips your orders. Well, it will always skip your order in live or sim if the market opens with a gap. But it's the problem with stops, Davey. So it's the stops that are not respected, and you can get horrible slippages during news events, which is why I don't trade them. Because I got stuck in them a couple of times, and it was not pretty. Let's put it that way. Squeeze says, hi, Dee. Make a long time I didn't trade London session. And I remember now why 1 hour 45 on 30 handles. What are you trading? I mean, if you're trading equities, yeah, that's pretty painful. Yeah, this is also one of the reasons why I wanted to start these sessions a little bit later, because the London Open, guys, can be like super quiet. It's like not... we're so brainwashed into NQ that moves a million ticks, but I mean, look at gold. It's still not moved anywhere. I think DAX has moved, so let's have a look at DAX. I know that we don't have it yet on Topstep, but like I said, they are working on it. Yeah, so DAX is moving. DAX is actually reaching the ADR high, so that could be a fade if we had the product. So it is coming. We're working on it, like I said. But yeah, so reaching ADR high, potentially reversing. So we still need to see some commitment to the reversal. This could be something that I like to call the auction fade. If we, however, ignore the ADR high and the market keeps going, you might be able to do like a pullback trade with the direction of the move. So rather than fighting the move, you take the information that we have ignored ADR high, and then we're going higher. Because why? ADR is actually a volatility measure. So if we are within the norms, you expect the ADRs to be respected. If we overshoot, we are then in some kind of a higher volatility day that could open up the possibility for a trending move. So that's how I use them to function of that. God, I look like a librarian today. Alright, let's see if there are any more questions, and then I'm going to wind it up. Yeah, don't forget, guys, Dakota is now doing 6 days of streaming, so he starts his session at, I think it's 8 p.m. Central on a Sunday. So that is some new programming that we have for you guys. Okay, what have I done? I've lost the window. There we are. Okay. Savage-san, putting this question again. NQ order book is pretty thin right now. Yeah, well, it's out of hours. Except from one order of 845 lot at 198.55 price level. What do you think of that at resting order? Well, it's a resting order by an institution, obviously, because nobody who is a retail trader like us, tiny fish over here, we're not going to be trading 845 lots and putting them as resting orders, are we? Because there's not enough capital, right? Even if you're doing pretty well, even if you're like, you know, multi-millionaire trader with, you know, some deeper pockets, you're still not going to be trading 800 lots of NQ. So yeah. Okay, Sarah Sprague, she says, I'm in DAX long. My problem is taking profits before it reverses or at a pullback I panic. So have a stopping point. Like, where did you catch DAX? If you caught it somewhere at the breakout, you're now reaching a high probability reversal area. So even if it goes up, that will be an odd thing, right? So it's better to just take profits, book your profits here at ADR high, where we expect the average daily range to hold. and only if we have an abnormal day, which I don't really see the point of today. Like we had Biden quitting. That's the only geopolitical risk that might add a bit of bounciness. But yeah, I mean, I would book profits here and then just call it a day. I mean, you know, we've reached the end of the ADR. It's like wanting more is all very well, but sometimes that's wishful thinking, because those proper trending days, they don't come that often. Okay, am I taking Series 3? Yes, I'm going to be taking Series 3. That's going to be my second qualification, because I already have the IAD Level 4, which is the equivalent, actually a more difficult version of the qualification. Because I think Series 3 is just like relatively basic stuff on delivery and futures markets and stuff. So yes, I will be taking it. I just need to move house first, because right now, like, one of the reasons why I'm in this room, this is a shared office space, phone booth down the road from me. We are going to be moving to West Sussex, and we're kind of having our floors done and stuff. So until that's done, I just don't see how I can have enough time to actually dedicate to learning, like, before everything is like settled. So it's probably going to happen towards the end of the year. And I also have this additional problem where I'm more than 150 miles away from any of their centers, because I'm overseas. So they're going to have to set up like a room that has a 360 so that they can see that I'm not, I don't know, cheating or something. So that will happen, and like I said, that'll be my second qualification. But it's a good thing, you know. It's something that is always good when you are doing these sorts of analyses, and any kind of professional development means that you're willing to keep going and keep developing yourself professionally, right? That's why it's there. It says, D, it's hit my level. It has not hit my level. We're still far away from... Oh, the 23. Yeah, okay. Let's see, and then I'm going to be finishing up. It actually overshot my level. I don't like that. So I'm going to be passing on this copper trade for now. Don't like the bearish engulfing that we're trading into either. And it looks like 23 didn't quite hold. We overshot, which means this is now potential for an auction fade. So using the market generated information, I'm now thinking that we're going to go back. And that's going to be my trade. See how quickly that can change, man. So actually I'm going to be plopping in a trade now, short. That is something that we didn't have earlier. There's my Topstep X, there it is. So I'm going to go in with 2 lots. Okay, that does not look right, so hold on, I need to increase this, there we go, and then aiming for about a 70 tick move or so, 65, okay, 600 risk, 2 lots, to potentially get 1.7k. So we'll see how that works out. I'm going to vacate this office, guys. This was fun. You will see me for fast markets today. So we can spend some more time together. And I will be in this little space again. So again, thank you so much for joining us. Don't forget to check out the Topstep X performance, stat, dashboard, and journal. So we have to keep journaling. Until later, I'm going to go see what the hell's going on in my house. And I will see you guys for fast markets.